Hey everybody, Mark Yegi here, and I'm going to give you 3 steps in this video of how you can find your covered call and create passive income every single week, every month, however you want to do it. Step 1 is to analyze your stock and the chart. So notice here I pulled up a chart on Netflix. Now I've already done the research to know that this is a stock that I want to own. So I'm excited about that because now it's over the 50-day moving average. When it goes over the 50-day moving average, now all you have to do is get ready and hope it holds it. I drew a little trend line here. So I've got this trend line. It shows a down trend line. It's running up into that as resistance. If it breaks through that trend line, we've got a potential breakout going, especially if it runs up to 639. On a stock that's $607, 639 is not out of the question. Maybe it'll go to the top of this bar here, which is about 618. And so the next step is step number 2. I want to determine the price action on the options. Okay, taking a look at the option chain is a good way to kind of figure out, is this going to make sense for us? So what we want to do is we're not going to do a regular covered call. We're going to actually step this up into a debit spread or a synthetic. And so that gives you a little bit more leverage, as I'll show you in just a second. The stock is right around 607, 608 as we're trading here. So I want to go out to the Octobers because that gives me plenty of time on my base position. What I'm doing is I'm replacing the stock position with a bit more base position. Now, this is pretty good for a short-term trade. I want to find something around a 90 delta, and I see the 460s are about a 90 delta, and they're trading for 169.20. So I'm going to write down that 169.20. The way I want to do it is I want to say, well, is the stock, if it goes to 618, I'm pretty happy with that. That's only 10 points from here. And I can go to these May 17th, which is 8 days away, and I can look at, all right, let's see if it goes to 615, I could still pick up $9.50. So I'm going to write down $9.50, and the stock right now shows at 608.91, which is basically 10 days away. Now let's take a look at the calculator. We've got the stock price in here at 608.91. It bought the calls for 169.20, and we're selling the calls against it for 9.50. That's an out of the money call, giving us $9.50 worth of juice. That's what we're after here. This is an income trade. This isn't a capital gains trade. This is an income trade. The strike price is 615. Remember, I think it's going to 618. So now we've got a break even that we've brought down to 159.70. And one of the probabilities is I'm getting that $9.50 on my side. Now we've got $9.50 worth of juice. It's about a 5.6% gain on the trade, just on the juice. If you annualize it, it's 217%. And this is a $47,000, let's call it a $48,000 trade, and you make $2,850 in 10 days. So those are the 3 steps you need to analyze a covered call. You need to analyze the stock and check out its chart, determine the call levels that you want to be at, and then you want to calculate the returns that you can get. If you want to learn how to do this, I have a book called Regular Paychecks. This is how you can create a regular paycheck from the stock market from the capital that you already have. Go ahead and click on the link below, and I'll give you that for free when you go to that link, but I'm going to throw in this little extra for you too, and that is that you'll get a free email mini course that'll come to you over a series of days that will show you how I think about this and the philosophy behind trading covered calls. So I hope you can see how that creates income for you and in your portfolio.